Good morning. This morning we want to focus on Aussie dollar, but I briefly want to talk about the dollar index first. Now, we are long-term bears in the dollar index. We think we're forming an Elliott Wave formation to the downside. We've had wave 1, wave 2, and then we've hit this 161.8% extension level at 96.36, and we've seen a bounce to the upside. Now, we think that this buying will be limited. We've got reverse trendline resistance at 97.80. If we reflect that to the 2-hour chart, here we believe we're in an AB CD formation to the upside, and we're currently in the CD leg. Now, as I said, we're long-term bears, so we're looking to sell into US dollar strength. So if we reflect that back onto Aussie dollar, here's the monthly chart. We're in an expanding wedge formation. This has an eventual bias to break to the downside. However, the Marabouzo level from January is located at 73.95, and that's held, and we've seen some upward pressure in this commodity currency. Weekly chart, here we're assessed to be in a corrective channel formation. The move to the downside found buyers close to the base of the Ishimoku cloud. We can also note that this area here, which comes in at 73.86, was resistance from the last quarter of 2015. It then became support, and we've seen 3 weeks of net gains. Now, the daily chart actually highlights a bit of stalling in this bullish price action. We've actually seen some inside days posted. Now, this time frame highlights a reverse head and shoulders pattern. So this is the left shoulder, this is the right shoulder, and this is the head, and this is the right shoulder after completing an ABCD formation. 77.27 is trendline resistance. Breaking down to a 4-hour chart, and we'll be able to see why we've got these inside days at the moment. So the 4-hour chart, again, another reverse head and shoulders formation. So left shoulder, head, right shoulder, broken to the upside, but we've stalled at this 161.8% extension level of 76.30. So we're now deemed as being in this corrective fourth wave formation to the downside. So basically opposite to what's happening in the dollar index. If we break down to the 4-hour chart again, but in just another outlook, we can see that we've got reverse trendline support coming in at 75.56, and that is actually very close to an AB CD formation to the downside. To give this a little bit more weight, we've also got our bespoke support at 75.50. So we're looking for this area to buy Aussie dollar this week. So our call is to buy Aussie dollar at 75.60. The stop can be placed at 75.10, and that would actually break this bullish formation. The first target, just going back to this time frame, the first target is 77.10, which is the measured move target for this head and shoulders breakout, and a move through there, and we'd look for 77.27, which is this trendline resistance.